So far 15 days into 2023 and last 15 days of December 2022, Nifty has been quite elusive. Up, down, sideways. I can use all kind of terminology which is available. But bottom line here is that we are jumping in the same place at a time when global markets and emerging markets are off to a great start. So for a trader, it's one of those patches where you really get sapped because of this kind of price action. But Atul Suri can always find trends in a boring, dull, or even in an ordinary market. So let's talk about some of those trends. See, I've spoken about your reputation, right? That
Thanks.
You can always find trends in a boring, dull market.
Shukriya.
So let's start with that. What are the trends?
No, so what happens is that typically these are the typical characteristics of a time-wise correction. Okay, if you take it 15 days, yes, it's been slack. But if you go back 3 months, 6 months, India is still a rank outperformer. In fact, the kind of outperformance we saw in the second half of 22 was historically, I think I've never seen India outperform to such an extent. And it cannot go on. Now, two things can happen. If global markets are where they are and India would correct because, you run up too hard, too much, or the global markets can do a catch-up. So
which is what they're doing.
Which is what they're doing. So now the thing is that there is a narrative that's been emerging in the last, you've seen a lot of broker reports that India is too expensive, etc., and it needs to correct. A lot of local participants are giving, pretty downright targets, etc. But I really don't think there's going to be much damage to the index per se. What we are seeing is a time-wise correction. Rather than us coming off, the globe is catching up. And the globe is catching up in a very big way. So the thing is that you cannot expect India to be a secular falling when there is no macro, there's no damage really. What India will do is it will spend time, and in this time it will exhaust people, right? As you rightly said that people go bullish, the market goes down, you go bearish, for the shorter term trader. And one day you will just find that it will take off because the kind of trends that I'm seeing globally, Nikunj, are very, very strong. Very strong. I mean, if you look at, we look at tech, etc., we look at NASDAQ, but you look at the Dow Jones Industrial, it is just a few percentage points from lifetime highs.
Most of the European markets are back in a bull run.
The recovery in China and Hang Seng.
Yeah, so there is immense global strength. And from my understanding, this is just the start. This is just the start. So you will find that within the next 3 months, a lot of global markets would actually be at lifetime highs. And then suddenly the narrative in India will not be that, oh, you're outperforming or you're too expensive, etc. You will find that India will also do. In fact, it will be an outperforming market. It's a market that's broken out first. Yes, it's doing a time-wise correction. In the short term, it's going to give you pain because, for the shorter term trader. But I think that for someone with a medium to long term time horizon, it's a great time because I see a total revival in global equity markets.
When you say pain, would we hold on to 17,800 because that's acting as a very, very strong
See, Aisha, it's very difficult to say on a day-to-day basis.
Sure.
But what I'm trying to tell you is that for somebody who is investing, I'm not talking about intraday trading, I don't think there's much downside pain. In fact, on bad days, these are markets, you will find that stocks that fall 2-3 days, then suddenly become gainers the next 2-3 days. What is up next 2-3 days actually goes down.
It's all over the place.
Yeah, so it's all over the place. So when you think there's a breakout, that is failing. And when you think there's a breakdown, it's kind of recovering. And that is what you have typically of a time-wise correction, where there is no major. At the end of the day, they say, na, khaya piya kuch nahi, glass toda athana. So it's going to be Barana, Athana, jo bhi hai.
How old are you guys? You're not looking at
I'm sorry. Yeah.
Anyway.
Okay, so if I have to make let's say a do and don't list for 2023,
right,
from your standpoint, let's talk about it. For a trader or a medium-term positional buyer, for 2023, what is the do and the don't?
No, I think that first and foremost is that there's going to be a lot of confusing global narrative, right? The whole thing about recession, the whole thing about inflation, the whole thing about this. So there are going to be a lot of macros. Today, all have become experts at macros, including myself. And honestly, we know
Nothing.
Right? So the fact is that there's going to be a lot of narrative, there's going to be a lot of negative narrative, a lot of pessimism. But I think the markets are going to surprise. I think we will have a good 15 to 20% up move on the index. I've been on record of 21,500, which works to 18, 20, 19% from here. So I do think that we will have a good positive year. The thing that will change, Nikunj, this year is leadership will change. What I am seeing underlying in the sectors and themes is actually shocking. What I'm seeing is that decadal underperformers, like we've seen it in PSU banks, right? I mean, it's a consensus bear trade for 10 years. Since 2008, they've done nothing. 10 se bhi zyada. It's almost like 13, 14 years. And it's given a blowout performance. I think another space that is going to be very interesting is areas of capital goods, of electrical equipments. These are again sectors and stocks we have not spoken about. People don't cover them and they are under-owned. So I feel that there is going to be a lot of interest in, metals for that matter. Again, one sector nobody touched, but the way metal charts are forming globally, again, you're seeing a revival. Look at copper, look at aluminium, the kind of move that there is happening. So it's not going to be like a clear runaway market. There is going to be, narrative is going to be something, people are going to keep looking at the tech stocks and keep looking at all these, Nykas and Paytms, etc. But the action is happening somewhere else. And I think whatever is industry facing, I, for one, make a strong case for a very good industrial revival. Industry-facing banks, capital goods, and such related plays, I think will be very, very interesting.
Is the strength on the charts in PSBs that strong that you would reduce allocations to your HDFC banks, Kotaks, and the others, and have higher allocation to even smaller PSBs?
That's already happened, Aisha. That's already happened. That's like a 1.5, 2 year thing. You will see the movements that are happening. Again, I have a vested interest in both stocks. Look at an ICICI bank versus an HDFC bank.
Yeah.
Let's not talk about small caps and all. That's a different narrative. But look at the shift that is happening. So the shift is happening towards industry, economy-facing stuff rather than moving away from defensives. I personally think that, in the last decade or so, we've had lackluster growth as a country. So the best place to hide were all these paints, like paint stocks for that matter. You'll find that paints, they're all pretty much off, You'll find all these areas which were which did well irrespective of the economy doing or not doing well. But when the economy does well, money, it's not that they will not do well, they will continue to do well. But money is scarce, money flows. Ultimately, money just looks for trends. And wherever the trends will happen, money will flow. And that is what creates more trends. So ultimately, that's the reality here.
So is it time now to look inwards and look at, let's say, domestic consumption, etc., or is it more industrial theme that you prefer and consumption is something which is not on your radar at the moment?
Consumption is also there, but what I'm saying is that it is not, that was the place to hide for a decade. That was the place to be in because you never got butchered. If you bought a PSU bank anytime in the last 10 years, you got smashed. It is very, very painful, Yes, it has done well in the last 1 year, but the 10 years prior to that were very, very painful. So consumption will definitely do well. If the economy does well, country does well, consumption will do well. And consumption is a very broad theme.
Yeah.
But I feel that the interesting part, the more interesting area is in cap goods, electrical equipment, all
Same
these
would
areas.
apply to India. I'm just using that as an example that India is a well-discovered, well-articulated, overhyped economy in terms of where the growth potential is.
Sure.
So that essentially is like a consumer stock, what we spoke about last time.
Sure.
Let's look at the other side. China is bombed out.
Sure.
Brazil is bombed out. Other emerging markets are bombed out. So I would argue and say that if there is a surprise coming in, like PSU banks in industrial will surprise us, if India is a consumer stock, and if consumer stocks are looking bearish, why should India do well?
So ultimately what matters is growth, Nikunj. The fact is that if India continues to deliver, these stocks are what you call oversold rallies, which tend to be very sharp. But after an oversold rally, to bring leadership in, you need growth. The fact is that if India continues to grow, and whether you look at global politics, etc., thanks to our polity that the way we are, thanks to clarity, and of course we have a budget also coming up, I know that. I think from there it seems to be one of the saner or safer places to be in. Yes, there will be an oversold rally. You cannot match China. But then you have got to look at China in 3 years context. And then you realize that, well, today at best it's a trade. It may do well for a short term. But for an investor who is looking beyond some point in time, and especially for domestic, we as domestic investors, you don't have much options. I think that it's a great place to be in. It's something which will initially lag. It will be a time-wise correction, but I think the catch-up will happen very fast.
When you say manufacturing and you alluded to electricals as well as cap goods, would you broaden that to the fact that one is seeing in defense, in railway names? Is it a basket of these stocks that you need to have in your portfolio?
I think so that there is even defense that we are speaking about, a sector or a theme we never spoke about.
Yeah.
If you see, these stocks have been listed for ages, but we never spoke of defense as a theme.
Yeah.
They were just part of a PSU basket. So you'll find that a lot of these new themes are emerging. In fact, that is what happens. Our indexes as thrown up by the exchanges are not very well constructed. To be really thematic, you will really have to go out and look fertilizers for that matter. fertilizers have done very, very well in the last 3 to 6 months. So there are a lot of themes that are playing out. They may not be in the box indexes that you see. And as I said, if you look at the construction, it's pretty pretty challenging. But there are a lot of themes that are playing out. Defense, we spoke about. Fertilizers, we spoke about. I think they are electrical equipments. I mean, there's nothing but beyond cap goods. We have no such sectorial themes. But I think you will have to mentally or mathematically come up with things and find a lot of new interesting spaces.
But Atul, both the defense as well as the public sector banking space has run up considerably last year.
Sure.
Is there still more upside if somebody has missed the initial part of rally, wasn't really sure that it will really pan out the way it has, because we have had false starts earlier as well?
Sure.
Is there still a huge amount of upside in both of these sectors?
I am a trend investor, right? So I am never going to be the smart predictor. I can really tell you what the trend is right now. And this goes on to Newton's law of motion, that things in motion stay in motion till we have an opposing force. So if these companies continue to deliver results, for me, ultimately, the driver is going to be, if these companies continue to give you returns or give you results, I think the returns will follow. Yeah.
You spoke about Newton's motion law, that's law number 2. My favorite law of Newton is actually the third law. Whatever goes up has to come down.
I don't know, that's gravity.
Gravity, right?
That's gravity.
So my question is, that's the third law, that for every action there is an equal and opposite reaction. If I convert that into the price action in PSU banks, defense,
Right.
From the bottom, some of these stocks are up 2 to 3 times.
Sure.
In 2023, do you fear whether it is law of gravity or Newton's third law, that whatever has to go up has to come back?
Right.
Will that apply?
As I said, I'm a trend investor, Nikhil.
So you will not worry about a peaking pattern in defense or PSU banks. For you, this is still going to be this trade still has a long way to go.
I think so. I feel that we are setting up the way, when industrial cycles happen out, and you go back to 2003, 4, 5, you'll find that these rallies tend to last very long, because they are based not on liquidity flows or not out of default plays, but they tend to be driven by genuine growth. And when that happens, I feel that the rallies tend to be more sticky, more persistent, and that's where I feel we are as a thing. I know the narrative is very cautious, it's bearish, we are expensive, etc., but then that's the markets, we have, every day someone will discover something new. A lot of people have jobs to keep.
But Atul, is there any tactical shift that you need to make in your portfolio allocation in 2023? Because gold we are seeing is at record high levels in India as well. A lot of international geographies, as you pointed out, are set for a big comeback as well. Is there a case to be made to have, let's say, more international exposure, more gold, real estate, other exposure as well?
See, international exposure makes sense to our argument earlier that yes, these are bombed out spaces. You can get oversold rallies which can be sharp. They will do better than India. But honestly, for the most Indian investors, how many have an advantage? How many can actually exploit that? How many are actually trading global markets? So it may be a good theoretical trade, but most people will miss most of them. So I don't think that, that is an issue. The issue is going to be more about asset classes in India. Now, debt personally is something I find very, very interesting, because there has been a lot of narrative about inflation, rising rates. But if inflation cools off, and you are seeing those kind of numbers in India, I think debt market returns in the debt which has eluded investors for a very long time can actually come back, and debt funds could be some very interesting allocations.
Do you not worry that it's going to come at the cost of equity underperforming? Because
not really,
a large
Aisha.
pool
Not
of
really.
money will move to debt.
Not really. Like I've been hearing this argument for the last 2 years. Everyone says, what if domestic selling starts? What if domestic flows turn negative? So, and what they have done, the reality is something so different. So I think markets do surprise. At the end of the day, I think the biggest blessing we have is our whole demographic play. And that is going to take us. What will happen 1 week, 3 months, etc. Honestly, nobody knows. But the trend, the mega trend is really up. And yes, at times you will have to make strategic moves like what I've been talking about, capital goods and industrials. But the bigger story, I still think, remains very, very positive.
What's looking at the brightest spot right now in terms of a chart? Would it be gold? Would it be the recovery in what we're seeing in metals right now, what copper has been doing?
I think the most interesting chart for me globally is the Dow Jones Industrial Average.
Yeah?
I mean, talking about S&P, etc. I think that's a very, very exciting space to be in. I think that it's, in technical parlance, it's done inverted shoulder, head shoulder. And I personally think that we're going to see a lifetime high very soon in the Dow Industrials. I find that very, very interesting. Yeah.
I'm intrigued with the dollar index. If you frankly ask me, 115 has become 102.
Absolutely. Nobody talks about it.
Nobody talks
Remember
about
how it was going up and everyone thought it's end of the world, risk off, risk off, risk off. And no, it's at 102. If it breaks 101, I mean, again, I'm talking about some levels. I feel that you'll be surprised where you see it on the downside.
So the traditional trade, which is weak dollar index, means strength in commodities and outperformance in emerging markets. More like an easy macro trade. Will that trade just resurrect itself?
It's very much playing out. And as I said, I mean, I'm looking at a level of 101 on the DXY. I think if that collapses, see, right now it's done a lot, so it may have a bit of a technical bounce back. Look at bond yields. You know, it's about 3.53 or whatever that there is. I mean, if these break 3.4, etc., this whole narrative can change. You know, what has been all about inflation, higher bond yields, the whole narrative can change. So these are, a lot of people talk about it when they're going up. People like to talk about negativity and end of the world scenario, but a lot has happened below that. And that actually has been positive for equities. That is where the setup is. So narrative sentiment being a part, but if you look at markets objectively, things are actually improving rapidly globally. And that is the reason why I feel that though we may have run up in the short term, though we are correcting, we will not give away much. It will be more a time-wise correction than price.
Every year we get some set of outperforming stocks. Last year it was ITC. A year before that it was large cap IT. Last year it was again SBI.
Sure.
Hypothetically, if this is December 2023, what do you think are going to be the names which we would be discussing?
I think capital goods.
Give me a name. Give me a name from large cap space.
I mean, again, with all disclosures, L&T could be an interesting play. Again,
it could be a stock of the year.
I think it could be very interesting. I don't know stock of the year, etc., but it could be very interesting. Again, decadal underperformance, sector representative. I mean, the best that there is in that class. I think that could be an interesting play. In fact, I think yesterday it made a new high when the market's being what they are.
Yeah, 22.18 on L&T as of now, and yesterday it shot up a good 3.25%. So this is, making trend your friend. What do you stay away from?
I think the stress for me, if I look at, is the rise or return of commodities. What happens is that even if you look at Brent crude, once Brent goes above 90, etc., it will start affecting a lot of sectors and industries. Because remember, crude, even all these metal plays, they are derivatives or raw materials for a lot of industries. So I think a lot of that margin pressure could again resurface. The way they had corrected in the last few months, it felt that, okay, that also is with a bit of a lag would kind of catch up. Things could start improving. But the way commodities, based on, of course, this whole China restart trade, have been again poking up, I feel that beyond a point that will again take center stage, and that could be a cause for comfort. So something that's not working, always there are negatives to the market. For me, the negatives is that if commodities really start poking up, which they have been doing in the last few weeks, that could create problems for India. Yeah.
Okay. So that aside, sectorally, IT, pharma, non-corporate facing sectors, stay away from them?
See, they will do well. Those companies, they are great industries to be in. I mean, IT is, I think, the greatest trade in our generation. It's ever going to be. But the fact is that, as I said, money is scarce. Money flows to wherever there are returns. Money flows to wherever there are trends. And ultimately, for the moment, these may take a little bit of time. Like if you ask me between NASDAQ and the Dow Jones Industrial Average, I would invest in the Dow. I think that kind of answers it.
Aisha, when we started this year and we looked at brokerage outlook, Citi to JP Morgan, from even Credit Suisse to even Goldman Sachs, that Nifty targets for this year are actually flat to almost no return. The most bullish estimate this year is actually Goldman Sachs, which is just a shade above 20,000. So let me tell you, sir, you've got the most bullish Nifty level for this year. Your track record of getting things right is been quite consistent. So let's hope for 2023 you get this
fingers
right.
Crossed.
15% is what you're hoping.
I think 21,500. I think it's a little more than 15 from where we are. Right now.
You're the biggest bull on Dalal Street.
Whatever.
That's like a lot of weight to carry at the beginning of the year. Nifty will be 21,500. Are you prepared for it? Newton law of gravity, remember?
These are pressures you guys put on yourself. I'm not putting it on me.
Will you go short? If you have to go short, or let's say start reducing your exposure, what would be the turning point where you would say that, look, I expected market to go higher, but X, Y, Z has played out.
Right.
And the script, what I thought will play out, has not played out. Last year, that moment was Ukraine war. Last year, that moment was when inflation went through the roof. Last year, that moment was when Fed started increasing interest rates. 75, 25 became 75. What would be that realization for you on the charts or in terms of the positioning, which would force you to rethink your Nifty target?
See, honestly, Nikunj, I mean, I can answer that as a level, but remember, I run a PMS. I'm long only.
Yeah.
So for me, the reality is that even if market's correct, I have to look for those pockets where I can hide, right? Where I have to fall less. The aim is to fall less in falling markets and to break out and be the early riser. So from that point of view, as a strategy, that's something which I am not factoring in. For me, the issue is that, okay, in case things can go wrong, as I said, anything can.
Yeah,
Our markets, we having spent so many years, COVID has taught us what unexpected is. So anything can happen. At that stage, my objective will be ultimately to see that where I could hide. And then maybe the move is back to defensive. Who knows? But at the moment, that is not what it is. And one has to align with the trend right now.
Read that flash on the screen. See what does it say. Atul Suri Nifty target for this year 21500.
Yeah.
It's a good
I've been
moment to
saying
wrap
it.
it in.
I've been saying it for the last 3-4 months. So
It's good to see a genuine bullback.
why not?
It's good to see that. You know, we're the most, this is the most bullish Nifty target we've got for this year.
Yeah, why
and touch wood, I hope it happens. Last year was like 4% return for the Nifty.
Yeah.
Very rarely Nifty.
But you know, like he said, it's not fair to look at the index. The move is outside the index. That's where the money is to be made, right? If that's the correct message.
I think apart from the index also, I feel the themes, you know, the
Yeah.
change that I'm talking about, I think that could be much more interesting.
Well, appreciate your time.
Thank you.
21,500 had sailed again. That makes you the most bullish man on Day Street, at least on record. And I really hope and sincerely hope you get it right.
Thank you. Thanks a lot. Dear. Thanks.
Let's take a break. And it's a flat start for benchmark indices, but no one's complaining. The fact that we managed to turn from 18,000, 17,800, 17,900, I get that just puts some strength, at least on the table.